showing yet, so you're not missing anything. You don't have to check your settings. Jobless claims today, and then some economic data for tomorrow, and that'll be the weekend before another short week next week. So Monday is going to be a half day, and we'll be closed on Tuesday, and then we'll be back on Wednesday. The forum or summit yesterday went really good between Powell and Yuta and Christine Lagarde. Right, so as you can see, initial jobless claims, the previous was 264. They're forecasting 265. This is going to be a really big deal. Remember, the Fed, although they wouldn't really want to say it that way, they want to kill some jobs, right? They want to cool down this economic expansion or economic train, however you want to look at it. And one signal that they're accomplishing their job is that there'll be more initial jobless claims. So the forecast is that we're going to see a little more than what we had last week. The markets don't like a surprise. So if it's a lot bigger, say 266, 267, that'll certainly be a market surprise and make us move. But the more telling one will be if it's below the previous number of 264, showing that the Fed is still failing to achieve its goals and that it still has a lot more work to do, which a lot of the bank analysts that they talk to, say like on Bloomberg, they're all reiterating this same comment right now. The Fed has given us a roadmap and they continue to tell us what they're going to do. Why not just believe them? For a while now, everybody's been saying the Fed won't tell us when they've reached their target of slightly restrictive, because as soon as they make that announcement, it has weight behind it that's going to move the market in a certain direction. And the Fed just doesn't want to see that happen. So they've been not announcing it, which means everybody thinks the Fed is lying to them and trying to second guess the secret motives of the Fed rather than just taking them at their face value. And Powell has continued to just pound the podium and reiterate the same message over and over: higher for longer, higher for longer. Even yesterday, reiterating yet again, we're going to remain in a restrictive stance for a long time. We got more hikes to do, and they don't anticipate seeing that 2% target until 2025 at least, and that they are not going to cut this year at all unless something drastically happens where they have to cut as a part of the ammunition that they keep in reserve in a time of a crisis. So unless that crisis comes along, they've made it really clear there's no cutting happening. And that they're very likely going to continue to raise rates. So why not believe them? These job numbers today will help reinforce that notion that the Fed still has work to do if they come in underneath that 264. Now, we also, it's not here, but we want to keep track of the revision numbers. See, the sneaky thing about some of these economic data points is they'll come up with this really crazy, and I don't want to cuss, but poo-poo number, right? And then that's what they throw in the headlines. And when nobody's looking, then they put out the revised number that very often doesn't look anything like that headline number, but they wanted the headline number because that's what everybody's paying attention to. And then they just quietly put in a retraction or an edit or revision to that number. So we want to also keep track of any revisions. It says previous is 264. Is that the revised number, or is that the headline number and then they came in behind it and revised it? Now, see, Bosick already believes that we are in restrictive territory and that we have been so for nearly a year. Others argue that they don't know where restrictive is because they don't know where neutral is. Here's FX Street. So we can see impact anticipation for the different economic events on the day. We do have additional auctions. And we've got some home data, which, I mean, have you guys seen some of the, like the home builders ETF? Man, like a rocket ship. So that's got to be hitting some resistance soon. It wouldn't surprise me if some of these pending home sales numbers today helps with that resistance that we're looking for. Just take it out to a weekly chart, right? Oh, just a little brag. The I keep resetting a $300 account. Once it hits 3,000, just knock it back down to 300, do it again, do it again, do it again. I had knocked this down to 300 and it's now past 100% with a trade that I caught last night. Before leaving the office, I put on just a little trade, came back in around 10 to shut off the computer, and sure enough, it turned out pretty good. All right, so we can see the K-Web is down this morning. Gapped it down, not a lot of flows yet, but it's still a little early. Gold and silver and the miners are up just a little bit. And we had a nice push this morning on the other side of the kill zone. So the kill zone's between 2 and 4. This move came in after 4. We set a high, tried to close that gap, and then retested that high again. It looks like we're going to get a wake-up call on oil. Just, just keep in mind, bigger picture, oil's got a lot of work to do, right? So we got this wedge here. It's very likely going to break up through that wedge. But still, we don't anticipate that it owes us more than, say, the top of the range. Yeah, it's pretty nice, right? You gotta love TradingView and their drawing tools. All right, inside day on US dollar China. That outside bar of yesterday failed and came back inside, but it was so big that we now are still inside day. I was much more excited about it inside day when we were stuck in that tight range, but now we're stuck in a much wider range and it's not so exciting. We can say, however, that yesterday, if we were to use OCR analysis, yesterday again continued with the higher high and the higher low and a higher close. And since today is not done yet, this current candle, all we can say for certain is that we have a higher low and so far a lower high. But that could certainly come up here and give us that higher high again. So the trend is still intact here for short duration stuff, not looking at weekly and monthly and whatever. And OCR analysis, it's an acronym OCR, one candle reversal, OCR. It treats each individual candle like a series of candles that we would use for, say, an entire run or an entire pullback, right? But each individual candle represents the whole thing. That's why it's OCR. Yeah, I don't name that stuff, right? Just I just learn it and use it. So US dollar Japan, they do have that new governor, Yuta. He was to speak yesterday for the first time in a world forum using English. That was kind of a concern because nobody knows what he sounds like when he's speaking in English. There's a lot of things that could go wrong. They might not get his jokes, might not realize he is joking. Any kind of comments like that can be taken out of context. So there was a lot of threats yesterday of a pending oops moment. It didn't happen. Good deal, right? We don't really want something like that to happen. It can rattle markets around the world. He got through it just fine, but there's still a lot of unknown left, right? There was some yield control measures taken back in September and October of last year. And if you think about the October low in the S&P, right, that one where we opened, gapped down, and then just rallied like a mad demon all the way up, and that was the start of a 2-month rally. That was the second intervention date from Bank of Japan. And we're getting near the level of where they did their first intervention, right? So if you look back here at September, that's when their first intervention, it was actually that candle right there. It's not hard to miss it, right? On a daily chart, that really big outsized candle. They threw some intervention at this thing, and like a freight train, it just kept right on going, right? Like a semi hauling a lot of weight behind it. It just couldn't stop, it just kept right on going. So they had to do a second intervention on the 21st of October. I remember that Friday. So we're in that area again. And with Powell there with Yuta yesterday, kind of had this sneaky little suspicion that those two would talk about, hey, are you going to do another one? And if so, when? Japan has given these little wink, wink, nod statements to heavily short holders right now that, hey, you might not want to be so heavily short, right? You might want to cover a little bit, maybe add a couple of hedges. So they're implying they're getting ready to do something, but how soon? Are they going to do it here? Or are they going to let this continue to go up until we get into that 150 area? I don't know, but I do say keep your eye on this. The last time they intervened and this went to the downside, the S&P, like I mentioned a minute ago, ripped like a mad demon for 2 weeks straight. Now, true, there was a lot of shorts that needed to cover, and there's a lot of reasons. And this time is a little different, but everybody always says, oh, this time is different. Yeah, okay. There's that October low, right? That isn't even the one, that one right there. So that run started that whole trip up, and that, of course, was the low of 2022. All right, so here we are with the S&P, sitting pretty high up. If we get that intervention, we could easily come back into that 460, 470. Not in a day, of course, right? I'm not talking crazy here. it would just be a continuation of this surge, right? This play to the upside. So don't discount it, right? There's a lot of reasons to believe that global events are going to come back and bite us in the bum. You know, we've been doing a pretty good job. If you look at the Fed's mandate and our I don't want to use the word success, but our results, there's a word. Our results so far shows that, you know, they're moving in the right direction. There's still a lot of work to do. Globally, inflation is much worse than it is here. They've got a lot of work to do. And then, of course, coming back to Japan with their yield control experiment. Remember last year too, they moved from 25 to 50 or from a 1/4% to a 1/2%. And still that didn't help, right? So worth keeping your eye on. Also worth trading. You know, this is going to take a smackdown. It's not if it's going to take a smackdown, it will take a smackdown. So there's a short for you, right? If you don't want to trade the currency pair, then go long FXY because it's just an ETF and it's running inverse of that currency pair, right? So if you trade FX, you don't need me to tell you how to do it. If you don't want to trade the FX, but you still want to participate in this play, then you could go long FXY. Just keep in mind the whole Buffett bet. If you don't know what that is, just hit Google. He went to Japan and loaded the boat. And then, of course, since he did it, a couple other big traders had to go and grab his coattails, follow daddy. And they've also done that. So long Japan crushed the precious metals of 2023 rally, just shut that thing completely down. And the move might not be done yet. So something to keep in mind. Really small day today in Europe compared to yesterday. It is recognizable that this really big pin bar here, which indicates, you know, that they defended that low and ran it back up. They, whoever they are, did it again today. When we dropped down into that zone, they were right there to defend it. But will they continue to defend it, and or are they done with their position? Because if they're done buying and they don't need to buy anymore, the next time we test this zone, there won't be a big buyer there, and we're going to move down into the next zone. I am looking at this on a weekly, but you can still see like a drop base rally, right? So if then, right? Take it here on the daily, got a little better of a perspective. It's that inside day, and this is the kind of inside day that I like. These are the ones that make my ears wiggle. Very small inside day, and just one is not a big deal, right? Like today, we're inside of yesterday. All right, cool. You get 2, 3, 4, 5 of these in a row, this tight, holding the range. When we come out of that thing, it's like at the circus when they shoot the clown out of the cannon. So the range is set on each side. We got to just wait for the breakout. If you want to kind of get involved in that, you got your another ETF, not as liquid and certainly a lot more gappy. Better off going to a weekly for that. But it's FXE. You can see Euro Currency Trust, FXE. So you can take that route. All right, I mentioned it yesterday. It's worth repeating. The dollar, until it gets out of this range, isn't really going to help us all that much. We are inside day at the moment. We failed to get out and came right back in again. And that is right underneath the green line. My green lines are a 20 MA. So that's a 20-week moving average, and we're right underneath it. Hit it this morning and just haven't made it through there yet. above or below really won't matter because it's a sideways moving average, which is junk. It's worthless. It's right now, it's just context. 105 and above, 101 and below. Until then, unless the dollar starts moving really fast, it's not really too much of a concern for us. So here on the daily, the picture looks a little, excuse me, that's not a daily. Here on the daily, the picture looks a little better with that 20 period moving average, but it's still sideways. Look at the defense across that high too, right? There's a lot of selling going on above that 103, and they're just tamping it right back down again. They have been for a while, right? Since June 15. So all this time, every time we get above that 103, they're just tapping it back down, just like they were doing back here, right? Every time we got above that 104 and a quarter, they just tamped it back down, and finally they give up, right? When you continue to work and you don't see any reward for your work, you're going to quit working. So, why go through all the effort if you're not getting rewarded for it? A lot of the ARC names are up this morning. What I did is opened up the ETF for ARC Innovations, and I took the top 10 names and then just a couple of extra names that are in that basket that I kind of like anyways. And I made a watch list out of that. And it just kind of goes to the whole group of things that we look at in the morning, because there's not necessarily a sector that covers this in a way that I would like, right? So just looking at the ETF itself doesn't really give us a lot of insight. So if we open the ETF up, take the names out of it, build a watch list from it, we get a little more insight. All right, so today we got the jobless claims, home sales, additional auctions, and then that's it until after the close when we get that balance sheet data. So for you 0-day traders, once we get past lunch today, you're pretty much good to go. It should be all right. Barring any sort of news, right? Always have that little asterisk in the corner, and or any misstatements that might come through. So the volume is right on schedule. It's right where it should be for the overnight volume. Not too light, not too heavy, kind of Goldilocks, just right. So we don't need that. Just get it out of the way. Taking a moment for the daily chart. We got past that 10-day moving average. We had a beautiful bounce off that 20. If the 10 was to be considered the center of the basketball court, then we are just now crossing through that zone and focused on an inside day breakout while we're at it. So what that implies is we have not traveled too far too fast since the bounce, and that we could easily follow through with this TRB setup and make it back up into the 440.70 area, 4470, 4480, 4490. We could easily make it back up into that zone. A couple of concerning issues is that really big day, 627, great expansion, nice TRB setup, but it didn't follow through. It should have had another candle and then another candle and made it back up here in like 3 days. We didn't get that. Instead, we pulled back off that high and closed. The next candle peaked out of it, couldn't make it, came back in and closed. And now we're challenging that candle's high. Now, I was just talking about this same thing with somebody yesterday on an intraday time frame, but it doesn't matter what time frame you're on. price action is fractal in nature, right? If it works on a weekly, it works on a daily, it works on a 15-minute, on a 15-second. So when you get a reversal like this, and say you miss your entry on the reversal, and you're trying to get in, and you're worried that if you did get in here, that it's going to stop hunt you before it continues to go up, that's what this looks like. I kind of had an example of that yesterday. Yeah, right there. So in one example here, you got the V bottom and the reversal and the run back up. And we close, pretty close to the high, definitely nowhere near the middle. And we expand to the next one, close near the high, on and on and on. Okay, makes sense, right? Back here, where we had the same thing, we had the start of the rally up, but it closed nowhere near that high and more than 50% through the middle of the candle, right? So closing way down here, and then the next candle closed inside, and the next one failed. We got the stop hunt, a lot of shenanigans, right? A lot of mess and trash before we finally got through. So that's kind of the point, that the TRB, since it didn't follow through like it should, and then we got this really big bar, and the next one failed to follow through, that we might get a down day, say 4,400, before we get 4,450. Wouldn't rule it out. That makes sense, right? I don't lose you guys. It's early. I don't nerd out on people too early in the morning. So yesterday we started with an MDP and we ended up hitting it. So it didn't stay an MDP. We are now firmly above that weekly pivot point, which we had talked about yesterday. That's maintaining that bullish posture at this point. So if we're above the weekly, we want to look for long opportunities and take long trades and expect the market to continue its bullish nature. Now, bullish isn't really the right word because it kind of implies that there's some momentum behind it, just upward, right? That implies direction without inertia or momentum or trend. 10-day, 30-minute volume profile. When we're at the high, we expect to go to the low, and when we're at the low, we expect to go to the high. We're flirting with the point of control, but we are past it. And now there's this really nice air pocket back here. We should be able to move through that air pocket relatively easy. So if we break above, say, the cog line at 44.32, it should be a pretty smooth shot all the way through that zone. At least dynamically speaking, you looking at the profile. On the other side of that, we would need something to radically change, right? What we have right now, status quo, wouldn't be enough to drive us through this. So maybe those unemployment numbers this morning, that could be the catalyst to get us going, or tomorrow with the last bit of economic data before the long weekend. Well, no, I shouldn't say that because Monday's going to have data. Monday's a short day, but it is a day. So there's going to be data on Monday. All right. The VPOC that we had added yesterday was tagged in the RTH. It's worth noticing how price interacted with it. And that way you got a better understanding of why do we put that line on there in the first place? It's not support, it's not resistance, but it is an area where we anticipate price is going to interact, right? It's going to pause, consolidate, digest through there. It's a representation of the greatest amount of volume traded by price. And you have to believe if that was the greatest area of volume, that there's still a lot of interested parties watching very closely at that spot, because it's either their entry or it's where they want to get an entry, right? And think about your own trades. You really watch price if you're in a trade and it comes back to where you got in. It's no different with this. Well, now that we've hit it, we don't need it, so we just take it off the table. But yesterday offers us a VPOC, so we'll just bring that line down here and keep it. It's at a cog line, 44.11. Makes perfect sense to me. Greatest amount of volume at the cog. Yes, please. There's been enough requests for it, so I added this 9 grid to the YouTube description. So just look in the description below and you will see 9 grid. And by the way, all these grids are shared in that Thinkorswim workbook, right? It's that Discord that I built that houses every chart that I use and every indicator that I have that is public that I can share. I do share. Either I built it or I found it on the internet or whatever, right? They're all in there. And it's searchable. So, you know, it's Discord. There's a search feature in the upper right. And I tried to provide descriptions of the indicators and charts that are in there so that they are searchable. But it's also in the description. All right, we are nearing the top of the weekly expected move, 44.40. The expectation is that we're going to close inside the box at the end of the week. But that doesn't mean that we can't go out of the box first and then come back into the box. So that line is not support, it's not resistance. These lines are nothing more than a measurement based on the average implied volatility measured move, right? This number here on the side. So every Friday at the close, it takes that number for the next Friday and it measures the highest point and the lowest point. So if we just pretended that today was Friday, we could look at 7 days out, follow it across, see what the expected move is. That's higher or lower, right? So we add that or multiply it by 2, and you'd have, 110 higher or lower. Mark that on the chart from Friday's close, 55 higher, and then from Friday's close, 55 lower. The one thing though is Thinkorswim doesn't allow you to access that data in an indicator. And so Mobius developed some way to mimic that data or approximate that data. I don't know how he did it. And I code on Thinkorswim, but I mean, he's on a whole other level kind of coder. So this indicator isn't exactly perfect because it honestly can't read the data that it needs to read, but it's a good approximation. If you can do that by hand, you'd be better. You'd be more accurate than this indicator. But close is close enough, right? So that's all that those lines are. They're not support, they're not resistance. They're just levels, gauges. So I'd already mentioned that the ARC basket is up this morning. The names that are in that basket, they're not all junk. They even had NVIDIA for a while, right? But they dumped their NVIDIA, sadly, poor suckers. They dumped their NVIDIA right before NVIDIA exploded and went up. I think we've all been there, right? You get out because it's not doing what you thought it was going to do. And after you get out, it runs away without you. Yeah. I usually eat too many cookies that day. But these are the names, some of the names that are in that ETF. Coin being a representation of Bitcoin proxies. So when we get Bitcoin proxies, it's not just coin, right? Got coin, Mara. I got a couple others in its own list. But everything in that tends to run as a group. So if coin is doing good, we would certainly do want to check those other proxies, see if we're going to get some follow through out of those as well. Oh yeah, that's looking pretty good. Mara 3.5%, Riot 3%, and then Coin 2.9, but MSTR 2.8. And these are some good numbers this morning. BITO 2%. Speaking of BITO, there's a new ETF. It's double leveraged. Pretty cool. Just came out though, so there's like nothing to chart. It's BITX. So, as you can see, it's got nothing to chart yet, but 2x Bitcoin, double leveraged, pretty cool. That just came out. So GBTC is just not getting flow yet, so that's why it's negative. It's still reading the after hours from yesterday, not the pre-market of this morning. We do have this rising wedge. It's a little bit of a concern. It's showing, pretty clearly on Mara. Kind of see it a little better on the daily. So that 13.7. So you might want to watch that for a reversal. That's a bowl. I don't really want to call it a cup and handle, just a bowl without a handle at this point. The KWEB constituents are down this morning 1.3%. So this would be JD, Baba, Baidu, PDD, right? Those basket of names. If everything else turns around and starts to get a little traction, then we could expect this to go up too. I'm surprised that it's not up, honestly. We did see US dollar Japan down a little bit with gold up, silver up, miners, but If you look at the names that are, that make up this K-Web, you wouldn't anticipate that they'd be down this morning, seeing everything else that's doing good. So, when you think about trying to catch a long trade, if something is gapped up 2% and something is gapped down 1%, and I'm looking for a long on the day, I'd rather go long from the thing that's gapped down because it has more room to run to the upside. But it would have to be one of those days where everything else is already running to the upside, right? You want to see the S&P running higher, the NASDAQ, yada, 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 right? Everything else. So we got our inside day breakout so far. Again, needs to hold. On the intraday here, it's this green line. We just lost it again. We're back underneath it. So a lot of struggle there. That is a textbook rally-based drop, but just my time frame doesn't show it too clearly. But it's certainly visible there, right? Textbook. So get your distal line and your proximal line. Let's do that a little different. And we've gone through this zone, right? So it lost its mojo. But there is an analysis or an approach that says it doesn't count because it's not in the RTH. Now, I don't really subscribe to that theory, but it's worth bringing it up. So while it's not my cup of tea, there are analysts that'll say, well, until we are through that zone in an RTH session, it doesn't count. Notice how when we got in there yesterday, this is where I got my short last night. We opened, we went right up into that spot, and that was it. Right, down we went. We were unable to get through that zone. Now that we have gotten through it, it's no longer necessarily worth watching, right? But I'm going to keep my 2 lines there just until we get into the RTH anyways. Plus, it's still a pivot. It's yesterday's high. And open, high, low, close, the 4 most powerful pivots that you have at your disposal. So you would still have that line there either way. We do have a voodoo line coming up at 44.35. It's worth mentioning. They continue to surprise me. I don't talk about them too much because I don't understand their development. And I can't mimic it. Right? It comes from simpler trading, and you have to go over there and get an updated voodoo indicator like once a quarter. So while the lines are absolutely amazing, and they do, like that white one down here, we have one 44.35. And if we continue to drive to the upside this morning, we're going to hit it. And no, I can't share that one. The paid indicators I can't share. They have disclaimers in there that says, if you share this, we're going to come after you. I don't need the hassle. All right, KRE is up, which reminds me the banks had that stress test yesterday. And this morning, a number of those banks are up, looking really good. They might be worth a look, right? Bank of America, had that move after hours when the data came out, and then, a little shenanigans, it's trying again. Just be a little cautious. This has a history of, making a big move, dumping off of it, coming back up to reset it, and then coming back off of it again. So if we did break through this, then last week's high at $29 would be a good level. It's got a market maker move of 1.7%, which is a half a dollar. And its 21-day average is around a half of a dollar. So you put those two together and you got a $1 potential move today. That would make sense from 28.73 to 29.50 easy, but I'd say 29, right? Focus on last week's high as a first target. We are underneath all the major moving averages, so gapping above those in the pre-market makes sense because it's like sneaking over the fence in the middle of the night, right? If during the day a market struggles to get through a moving average, what we'll see is a lot of times they'll go into the close and they'll make that move after hours or in the pre-market. So we had all three of these moving averages overhead. We weren't able to get through it, or didn't even try to get through it in regular trading, but now in the pre-market we're at 28.63, so we're really close to being above the 20 period. We're already above the 10 and the 50. All it's got to do is keep it. So if you think about it, 28.50 is where that 50 period moving average is on the daily. That's, I don't want to necessarily say it's support, but that's certainly a line worth keeping an eye on. And it lines up pretty good. So yeah, I'd say, these look pretty good. There's a gap close at 29.20. We can get there today very easily. And we're talking about going from a red to green. And we're talking about having already broke out above that high right there. And the gap is closed, that gap right there in the pre-market anyways. And then we've got the start of that channel for the next gap at 29. So just be really careful at 29. And if we can get through that, then we'll target the gap close at 29.20. It would be nice if you got another shot, if it pulled back before the open or at the open, came down to 28.50, maybe overshot to 28.38, got a bounce and then a run, so we could get in just a little bit lower. But I like this for a long into 29, maybe into 29.20. And of course, Wells Fargo, same thing, really resting strongly on that 50 over the last 4 days. You can see all the buyers that defended that low. And in the pre-market has exceeded 41.50, so above all of those other moving averages, still underneath the 200, so it's still not healthy. But that'd be a nice push through all of this resistance here and through the two major moving averages. And we got a gap close at 42.20, and I'm gonna have to zoom in a little because I can't tell if that's closed already or not. Nope. All right, so we got another gap that needs filled, and we're almost there, right? 41.65. We're definitely going to 41.65. At least get that closed, and then we'll focus on this next one. 42.18. And although it's got this really broad base, this is a TRB setup, right? It's a cup, It just needs the other side. It's a bear flag failure play. There's so many ways to call it or talk about it or discuss it, but all of them all say bullish. The only one that isn't bullish would be calling it a bear flag. And for it to be a bear flag, it would need to break out of the bottom. So now that we've broken out of the top of that box, it's called a bear flag failure, which is a nice trade, by the way. Bear flag failures, I love them. I like them better than a bull flag failure. Maybe I'm a little biased. When we look at XLF, the ETF for finance, we can see a broader selection than looking at the KRE, right? KREs are regional banks. So when you look at the XLF, you'll notice the names that are doing good from that. It's the top 25 biggest banks, right? That had to do that stress test. So we got JP Morgan, Bank of America, Wells Fargo. I call these like the three cousins. They generally run together in a group. And if their charts don't match, give them a little time, because that just means one is lagging and it's going to catch up to the other two, or one is leading and the other two is going to catch up to the one that's leading. Then you've got the other three cousins, Citigroup, Goldman, and Morgan Stanley. Their charts generally match as well, and it's the same thing. If they don't, then one of them is leading and the other two is going to play catch up, or one is really dragging its feet and it just hasn't yet caught up. But we can see this morning that all of them, other than BlackRock, it's not getting any flows at all. All of them are enjoying the data release for the moment. It does kind of give the Fed license to hike again, doesn't it? This this rubber stamp of health and compliance from the banks. Right? If there was a concern that the Fed was tightening too fast and, like a bull in a china shop breaking things, this data that came out yesterday of the banks shows all good. No, nothing to see here. And now the Fed may feel a little more comfortable about raising rates next month. Maybe. So, big picture, we're looking at a weekly chart. Big picture, there's still a long ways to go. We are at 33.12 this morning. So we're still underneath that trend line that I just snapped. And that is a rising wedge. Not necessarily a very pretty one, but it is a rising wedge, and rising wedges tend to break to the downside, even if we pop through the top first. $34.40 is the line in the sand for XLF. There's really no expectation that we're going to get through that zone. If we do, it's very likely an overshoot before coming back down. Consider this like a rally into resistance, right? If we do get through that, then obviously we're going to go back to the top of the zone, 36.25. I mean, it's possible. They're beat down enough that, it could get flows where things just get attacked. We've seen it a lot more over the last 3 years where something pops up into the limelight and everybody just piles into it and it drives it way farther than it should have moved. All right, semiconductors are getting a little bit of love. If you remember yesterday, it had that news, and we had talked about how it was just a proposal. Nothing had been set in stone. Everybody was just overreacting, knee-jerk reaction. So maybe kind of watch the semiconductors and see if there's an opportunity. This head and shoulders on the daily still exists. So, you got to kind of have a little bit of concern that we're going to get the follow through. And just remember, it only owes you the range, 50% of the range, and then 100% of the range. So if that's our breakdown, then you're looking at like, that 136, 137, and that's a long ways for SMH. All right, guys, we got jobs data. Be careful, be safe, have a good day, and I will see you all tomorrow.